the government makes cash illegal, tries to herd us into a central bank digital currency system, which they then can use to track every movement and every purchase that we make. The people who value their personal freedom and their privacy don't want any part of that, then we're going to be trading with gold and silver, and I think silver coins are going to be the best thing to have for however long that period lasts. If we have that kind of a period and it ends 1 year later because there's a rebellion against CBDCs and then the peasants take their pitchforks to the castle and demand a gold standard or something like that. If it's only a year, silver in particular still gets more valuable because of its industrial uses.
JohnRubino, the founder of DollarCollapse.com, highlights the current industrial shortages of metals like silver and copper, expressing concerns about the potential challenges if these metals are introduced as forms of money. The total silver mine production is at its second lowest in a decade, signaling an undervaluation of silver. The diminishing mine supply contrasts sharply with increasing industrial demand, emphasizing the discrepancy between the current silver price and market realities. According to Rubino, while silver may retain a monetary role, its significance might be more pronounced during a crisis between the failure of fiat currencies and the emergence of new gold-backed or commodity-based currencies. The current price of silver, at around $23 per ounce, is considered by some analysts as inexcusably low, not accurately reflecting the prevailing supply and demand dynamics. As time progresses, investors are expected to confront the diminishing supply of silver juxtaposed with increasing demand, compounded by the Federal Reserve's apparent inability to restore inflation to its 2% target. When this scenario unfolds, the price of silver is anticipated to experience a notable upswing. Rubino speculates on potential government actions, including the possibility of making cash illegal and introducing central bank digital currencies capable of tracking every financial transaction. In response to such developments, individuals might increasingly turn to gold and silver for their transactions. However, the CBDC conversation gained significant attention last week when former United States President Donald Trump declared that he would never allow a digital dollar if re-elected. Trump emphasized that a CBDC would pose a dangerous threat to freedom, and he pledged to prevent its introduction in America. This statement, made on January 17th in New Hampshire, seemingly transformed the CBDC discourse into a politically charged issue, with the debate taking on a partisan dynamic between Republicans and Democrats. Join us as we delve into insights shared by JohnRubino. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
If you have a gold standard based on the blockchain, because you can divide gold into infinitely smaller parts to make small change in a blockchain scenario, right? Well, at least in theory. I don't want to say anything that's, with absolute certainty when it comes to blockchains, because as I said, I'm not an expert on that subject, but it seems like you could do that. And so if you could have fractions of gold grams trading electronically, instantaneously around the world, all based on, a completely agreed upon price for gold, you don't really need to complicate it with other metals. I think there's a decent chance. Oh, and the other thing is we're already facing massive shortages industrially of silver and copper. So introducing them as money might be one of those things where we, kind of cut our nose off and to spite our face, because that would make the transition to electrification much harder, because we're artificially raising the price and lowering the supply of these industrial metals that we really need. So I think silver still has a monetary role, but maybe it's during the crisis when we're in between the failure of fiat currencies and the rise of new gold-backed currencies or commodity-based currencies in some other way, But let's use gold as our example here. And, the time might come when you go to the farmer's market and you hand them a silver maple leaf or something like that, and they basically give you a week's worth of fruits and veggies, okay? And they're happy to do it because you're giving them real money. And we could have a period where things are so messy that the silver and gold that we've stacked actually become tradable money for a while. It's physically inconvenient to do that long term. So we're going to have an electronic successor to that when it happens. one of the reasons we should be stacking so aggressively right now is that there could come a time the government makes cash illegal, tries to herd us into a central bank digital currency system, which they then can use to track every movement and every purchase that we make. And the people who value their personal freedom and their privacy don't want any part of that. Then we're going to be trading with gold and silver, and I think silver coins are going to be the best thing to have for however long that period lasts. And they'll still be valuable regardless. If the period, if we have that kind of a period and it ends 1 year later because there's a rebellion against CBDCs, and then the peasants take their pitchforks to the castle and demand a gold standard or something like that. If it's only a year, silver in particular still gets more valuable because of its industrial uses and because it's a good backup in case the current financial system fails. So we're always going to want to own silver. It's probably always going to be a really good investment. So just because we don't go to a trimetallic system, it doesn't mean you shouldn't own silver. It's got multiple values going forward, and it should be one of the things that we are, as aggressively as we can be, adding to our portfolios.
The most recent data from the World Gold Council reveals that in 2023 alone, Brics member China augmented its gold reserves by 225 tons. China is at the forefront of this gold buying trend within Brics, with Russia following closely behind and India ranking third. Notably, the gold accumulation trend from Brics is expected to persist in 2024, as the central banks of Brics nations, particularly China and Russia, have already initiated gold purchases in January 2024. According to Rubino, countries like China and Russia view gold as a valuable investment in a world dominated by fiat currencies. The expectation is that the gold acquired now will appreciate in terms of major fiat currencies in the future. There is widespread speculation that the Brics bloc intends to underpin its forthcoming currency with gold. This strategic move is perceived as providing the alliance with a secure foundation and enabling it to maintain a strong presence in the international currency markets. However, details about the formation of this new currency remain undisclosed, as a Brics currency is yet to be launched. Rubino acknowledges the existence of trust issues among Brics countries, many of which are governed by dictatorships. Trust plays a pivotal role in adopting a common currency, and Rubino speculates that shared concerns about U.S. actions on the global stage might foster increased trust among these nations. Let's get back to the interview.
China and Russia are accumulating a lot of gold. Central banks in general are net buyers of gold right now. And I think in the last 2 years, they've taken about 1,000 tons per year, which is a huge number in the gold market. That gold serves a lot of purposes for a country like China or Russia. One is that it's a good investment in a world of fiat currencies. The gold that they buy now is going to be worth a lot more in terms of dollars and euros and yen in the future. So as far, if they're just doing it for that reason, it's a smart thing to do. But it also gives them the flexibility to back their currencies with real money at some point in the future. That's not an easy thing to do, though. So we shouldn't expect that just to happen. Some Monday morning, all of a sudden, there's this big, giant gold-backed currency out there. Because if you're the first one to do that in a world of fiat currencies, and people decide that you're serious about it, the value of your currency goes up relative to the fiat currencies out there. And that makes, your citizens who own gold richer, but it also makes your exports much more expensive because they start out priced in your appreciating currency, and that can destroy your export sector. So it's not the kind of thing that you want to do lightly because it could get you assassinated. When you start messing with the multinationals that run big parts of your country, you're taking a big chance. Actually, it's interesting. Switzerland had a problem like this a few years ago because Switzerland is basically not really a country. It's a banking sector with geographic borders, and because of that, a lot of money flows into the banks there. That makes the Swiss franc a relatively sound currency, which makes it go up when the fiat currencies otherwise are being inflated away. They faced a situation where the Swiss franc was going up relative to the euro in a way that was debilitating for their export industries. And so they had to back off and they had to peg the Swiss franc to the euro, which means they they accept Eurozone level inflation in order to protect their export industry. So, that's kind of how it works if you try to go solo to a gold backed currency. But one way it might happen that is not destructive would be what Putin has been talking about for Russia and the Brics countries, is where they devise a currency that is just for trading within the Brics bloc. So it allows them, and they can back it with gold, so they all know what it's worth. It's worth a certain weight of gold. It's not worth anything, who cares what it's worth in dollars or whatever, but they know exactly what that currency's worth. They all buy some and they use it to trade with each other in a very monetarily stable way. Now, that's got some potential, the downside of that is that the Brics countries are mostly dictatorships who don't trust each other for good reason. And so, you kind of have to trust each other to have a common currency. So I don't think they're there yet, but I think it's becoming one of those situations where the enemy of my enemy is my friend. And they're so traumatized by what the US is doing around the world. The US could be driving the Brics bloc to a gold-backed currency. So I think that's a complete possibility in the next few years, as long as we understand the technical hurdles that it would involve. Wouldn't be easy to do. It could be incredibly messy and it might not work at all, but it's something they might try, just because the alternative, which is to continue to use dollars for their trade, is so unpalatable right now.
Analysts assert that Brics nations are accumulating gold to safeguard their central bank reserves in anticipation of a potential upcoming recession in the United States. The looming U.S. presidential elections are seen as a factor that could impact global markets, prompting countries to bolster their gold reserves as a precautionary measure. In the face of rising gold prices and the ongoing gold buying trend, what implications might this have for the broader geopolitical and economic strategies of Brics nations? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.